Good evening, TheoTrade. This is Corey Rosenblum, and you're watching the Theo nightly video for the 7th of January here in 2021. And I feel like we're a broken record, that the market just keeps going up and up and up and up and up. But there's precedent for this, not making a prediction necessarily, but drawing your attention back to this concept. We'll go back a few years, 4 years. Here's the S&P futures. We'll actually make it the SPX. Not much difference. But in this bullish holiday drift. So we made it through the holidays. That's Thanksgiving. That's the end of the December holidays and the New Year. And we did have the drift. So what I'm trying to do is not predict, but to warn or protect or just expand the horizon of what might happen and what's actually happening, which is this continued drift. So this is back in 2017. That led to some end-of-year drift in the S&P and the other indexes too. And what was January? This, which is just about, with the exception maybe of 4 trading sessions, were positive. So this is not out of the question. Why did this happen? No clue. Right? We don't have to know everything, but it did happen. And that did not occur the next year, right? The exact opposite. Well, that's not necessarily the case. The December was a December to remember because it was a rare bearish or down month. But even then, January, take January here, just about was up every trading session, again with the exception of a few. And we did this once again in 2019, called this the bullish holiday drift, and take us into January. It was not as straight up bullish because there was at least a mid-month pullback or late-month pullback. At that point, February was bullish. We all know what happened next. That's the coronavirus crash and then the recovery. So no, not a prediction that 2021 will follow those patterns, but we're 4 trading sessions into the new year, and we're at all-time highs. That's true for the S&P 500, true for the Nasdaq, barely, but just crested at a new closing high in the futures. The Dow mini futures, and the Russell, which is continually getting stronger, but it had to play catch up to the others. They made highs earlier, comparing the weekly charts here. This is the Dow, made its high earlier, new all-time high. And all those things were made before the crash and the recovery, except for the Russell. There's the crash, and it took a while to recover. So it played catch up at the end of the year. So just back to this commentary that no one knows the future. We could just position our portfolio in some trades and lean to the bull side, or protect ourselves with some delta negativity or negative delta, put spreads and the like. That is a correct strategy, but we're in the same discussion. We're preparing for an event of a volatile future, and it will happen. Markets cannot go up forever. Even in the context of this recovery, there still were down days, and that's the problem with being a non-stop blind bull. And a blind bull just says this is going to go up forever. That's not going to be an effective trading strategy, because there will be days, sometimes 1 or 2 sessions, that will eliminate every single gain that took place in the course of a week, 2 weeks, 3 weeks, or sometimes a month. That's the other side of the equation. And that's, again, what I want to draw your attention to beyond all the news and the headlines and the volatility, which we'll discuss in a moment. It's this concept of none of us know what the market's going to do. We can just position ourselves. And there's 2 ways to think about it. Way 1, step in front of a steamroller. Trade long, trade bullishly. It will feel strange. It will feel weird, but there's precedent for markets going up, 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 without a decent pullback. It happens. It's rare, but it does happen. So the first thought process, just keep trading bullishly with short-term trades or short-term intraday positions, or very, very quick in-out spreads or quick verticals. Quick as in 1 to 2 weeks for duration. Understanding that that will work until it doesn't. And some news event, some headline, some economic event, some fundamental event, or just some random event will take the market and destroy or give back all of the gains. So here's January. And in 2 sessions, it was all gone. And the same thing happened over here with respect to the January into February. And that itself, actually, that first few weeks of the coronavirus, first two, these are daily charts, so it's 1 day, 2, 3, 4 days, 1 session, 2, 3, 4 sessions, took us right back to where we were in October. So that is the second way to trade, is to position yourself short, get bearish, be defensive, be hedge, or be outright delta negative. And in that case, your risk is the continual bullish upward drift, which is frustrating, which doesn't feel good, which is not comfortable. But what you're doing is hanging on for the long term being probably late January or February, as late as March potentially, which is get your account, portfolio, and trades prepared for the short side, for a drop. Many ways to do that. And you will profit when these 2, 3, 4 sessions take place. And it's not just a dramatic drop like that. The same logic can be applied to May into June, where 2 sessions took out 2 weeks. And again, it's just a different way to trade, a different way to think about markets and position and put trades on. Same logic. It's that cliche, the market takes that escalator or the stairwell up and the elevator down. And that's going to be true for individual equities, some of which continue to get stronger, which is Tesla, have Nvidia up at the high. These are stocks that were strong today. Walgreens Boots is coming off the lows. We talk about DuPont de Nemours, which is rapidly increasing on high volume into the new year. And of course, there's PayPal and good friend Apple, JP Morgan, and just a lot of financial stocks are doing this multi-day rally. And that's the headline news. The strength in the financial sector, strength in financial names. At the same time, weakness in the bond market. And I track and trade the bonds with the TLT. You might do so with futures, you might do so with options on futures, or just options on the TLT, just the bond market. And the same will be true for other equity ETFs, including the SPY and other names like that. And on the Tuesday video, we discussed the SPY and the ES and how the option spread talked about Friday expiration and the volatility in terms of the pricing was so wide, but that's contracted. Volatility or bid or pricing in near or options that are further out of the money, if you're thinking of selling options or selling premium distantly, they were very well bid. And that indicated that there was a strong chance for rapid market movement. It just happened to the upside. Volatility or rapid price action can occur to the upside, and that's where we are. We had the Georgia races. We had political headlines on Wednesday and into Thursday. So we can easily pinpoint politics as being a catalyst for market action. But the option market, or the pricing of the grid and the option grid, again, reference Tuesday's video, that helped us indicate that there was a pocket of volatility and a week that was going to be exciting. And sure enough, that's an understatement. So that volatility is creeping down. It's not as high as it was on Tuesday evening, but still, here is the fruit of the movement, which in the SPY, kind of squaring the circle, moved from, here's Tuesday, 368 to 380. And that's a big move for the SPY contracts. So that's what we're looking at as we go into the weekend. That's behind us. The dust will settle, but where are we and what stocks are joining us? Not so much for the rest of the video, but on our stocks making new 52-week highs, just make a note of which is the top of them. And these are strong stocks getting stronger, joining the S&P or joining the broader index at the highs. It's 103 stocks according to the scan. And the biggest market cap names are Tesla, Johnson & Johnson, Broadcom, T-Mobile, Texas Instruments, Union Pacific, and some financial companies, and Caterpillar and Target, John Deere, Micron, and other names you may be familiar with. These are stocks that are strong, expected to get stronger. That which is making a new 52-week high now has decent odds to continue making new 52-week highs. And if we do get this creep higher, these are names we might want to look at. As always, be careful and safe. This is Corey Moon with tonight's Theo video update for January 7th, 2021.